Definitely, they will be raising a lot of money. Does the outlook remain strong for you as an investor? I think is also the valid question. Thank you so much for that, Sharath. Pranav Haldia, Managing Director, Prime Database Group, joining in this morning, as is Deven Choksi, Managing Director of DR Choksi Investment Managers. Welcome to both of you, and thank you so much for your time to us here at NDTV Profit. Pranav, I'm going to start really with your take. Do you think that appetite remains after what we've seen through 2025, which was listing pops getting weaker and weaker, and maybe subscription levels also dwindling in some select IPOs?
Yes, good morning, Tamanda. Thank you for having me. As your colleague rightly pointed out, 2025 was a blockbuster year, and one of the things which we pointed out was this is the first time in India's IPO history that you've seen two back-to-back years of all-time highs. Because if you go back, 10, 15, 20 years, you've always had an all-time year and then a couple of years of relative quiet. Now, where is this coming from? So, to answer your question, much of this is obviously being funded by, retail investors, either directly or through mutual funds. That's where the demand is coming and which is creating the supply of companies that you've seen. As you correctly also pointed out, in 2025, you've seen a slight tapering of demand. If you look at oversubscription figures, if you look at applications, if you look at listing gains, because ultimately you have to realize that most of the retail investors come in for a listing pop, and you've seen a reduction from 30% to 10% from 2024 to 2025. My view remains that, there is, of course, a lot of demand for fresh paper. We have to realize that, mutual funds are flush with money. They're continuing to get crores of rupees on a month-on-month basis. There's only a limit to which they can invest in the secondary market where there are already valuation concerns. So, of course, there is a requirement for fresh paper to be invested in. But I think for this trend to continue, and of course, while the pipeline looks extremely strong for 2026, I think, valuations, of course, need to be kept in check, and the secondary market needs to support. Given that, we could perhaps look at another blockbuster year in 2026.
Okay, interesting comment there. Pranav, I wonder what Devin Bhai thinks about this, because the numbers, let me put a few numbers there, right? If you look at the recent flows for SIPs, we're talking about 30,000 crore rupees on a gross basis, and some might argue that the net number is lower, but we're still talking about fresh deployment of 30,000 crore rupees, most of which heads into equity mutual funds. There is no question about ammo. So therefore, Devin Bhai, do we see another year where valuations get questioned on an ongoing basis for this primary market issuance?
Good morning, Alex. Well, I think 2026 is going to be the year of execution. As I see it, I think vis-a-vis the exuberance that we saw in 2025. In fact, in the second half of 2025 itself, I think the reality check has come in, wherein most of the companies who priced themselves higher in the IPO, they saw the reality check, and probably I think most of them, had to come down below the IPO price, given the kind of valuation at which they were quoting, versus the valuation, I think, which is a realistic valuation. Fortunately, in 2026, I think we're starting the year with some of the large cap companies available at a fairly attractive valuations, I think in a vicinity of around 20 times price earning ratio. So that's where probably I think you're likely to see the equal amount of allocation of money, if not more, from the mutual fund side into some of those companies, because they're proposing to have higher amount of return in the portfolios of the investors, including in mutual fund. Whereas I think the reality check would prevail upon in this year, wherein some of the large companies like Geo Platform, NSC, Flipkart, Oyo, those kind of names, I think, which are likely to hit the market in 1 or 2 quarters from now. Given that kind of a situation, I think they would possibly be, I think, pricing their IPOs, I think, at a realistic level. As against, I think, they priced, earlier companies priced, I think, in 2025 at a significantly higher premium. So that's going to be one change in 2026 that I'm expecting, believing that 2026 could be a rewarding year to quality companies vis-a-vis, I think, the number of companies which came in 2025. So those quality companies could possibly command, I think, higher amount of take from the investors, both the retail as well as institutional segment of investors.
That's an interesting point to make over here as well, and the kind of IPOs that are coming in. Pranav, let me come to you as well. Now, if you have to look at, the markets versus the kind of returns you're looking at from IPOs, there is a frenzy and valuations are very steep, and that's what we've seen in history as well. At the juncture where equity markets are, where people are expecting a further upside to come in, would you say it is more lucrative to enter into the secondary markets or in the primary markets?
Well, my view remains that I think we should stay away from generalizing as far as the IPO market is concerned. Yes, there will be all kind of IPOs, some which would be richly valued, some would be moderately, and some would be attractively valued. So we should, not generalize. My view remains that if an IPO gets subscribed even a single time, it shows that there was enough demand for that IPO at that price. And, ultimately valuation is an art. It's not a science. And, it is because of this fact that we have a stock market. If everyone had a consensus on valuation, there would not be any stock market. At the same time, we need to understand that both companies, which are the issuers and the merchant bankers, they don't want the IPO to fail. So as such, they would always price the IPO in a manner that at least guarantees a minimum one-time subscription. This is even more true in the current market where you're seeing a plethora of choices as far as investors are concerned. We also have to realize that promoters, most of the IPOs which come to the Indian market are promoter-controlled, family-owned businesses, where even post-IPO, promoters continue to own 75, 80, 85%. And if the stock price does well post-IPO, it is actually them who will gain the most. Even the merchant bankers, they have to face the same investors time and time again, and hence, they would not, continually overprice, so to speak, the IPO. In my view, the real proof of the pudding also lies in the fact that you've seen in the last 3-4 years, which have been a boom time for the IPO market. You've still seen about 94 companies which are looking to raise 1.4 lakh crores, which did not launch their IPOs, which led their approval lapse. So we have to realize that, getting the SEBI approval is literally the last step before an issuer can launch the IPO. And if there were 94 companies which did not launch, what was the reason behind that? That was purely because of valuation, because the valuation which they were expecting is not what the market was giving to them. So I think we have a check right there that companies which are expecting a higher valuation and investors are not providing it, they let their approval lapse.
Yep. It's a fair point. Devin, my last word to you, and I'm going to extend this beyond the primary market to ask about the secondary market. We're poised at a time when we've seen a time correction. The question is, how far does that go? One of the arguments that was made last year is that the primary market issuance and the amount of paper that was hitting the market was proving to be a drag for the secondary market. Does that continue in your opinion? Does that prove to be a major weight on the heels of the Indian equity markets, or does that change on account of earnings in your opinion?
So frankly, I think the domestic investor did their bit in the last year also by way of investing into the secondary market. It was largely the foreign investor who pulled the money out of the secondary market, and that's where I think the larger fall had taken place. In my viewpoint, I think 2026 starts with the promise that I think the money is going to flow in and not going to flow out from the foreign investors. So that is the first proposition. Second, given the kind of SIP book growth that we are seeing in the mutual fund, is expected that I think this chunk of money is going to get invested equally into the secondary market, largely because of the fact that the valuations are giving too much of comfort today to most of the fund managers. So that is where probably I think we are likely to see, if not more, I think the balanced amount of fund getting invested into the secondary market with the primary market. The new issues in the primary market certainly are some of the large ones. And I think that's where, which I mentioned, I believe that I think that's where majority of the fund investors would be putting in money, because I think those papers deserve to be in the portfolios of the investors. So from that perspective, I would not say that I think the secondary market would get the same rough treatment which it got in 2025. On the contrary, would believe that 2026 would probably give a fair allocation to secondary market as well, given the kind of flow that we are talking about. Also, the fact that I think the retail consumer and the investor is getting more amount of money left in his hand, given the kind of tax break that they got last year. But that money is also likely to come into the market, I believe.
So I think the money that's going to flow into the primary markets is something we need to watch out for in 2026, and that's the key. Thank you, Pranav. Thank you, Devin, so much for joining us on the show. Always a pleasure.